Good day, friends. Today we will discuss profit method of valuation. This method is basically based upon income approach to similar to income approach. Here we will be calculating gross profit from which after deducting various outgoings or various expenditures we will calculate net profit, and then we from the net profit we will calculate the value of the property. So this is called profit method of valuation. The profit method of valuation is primarily used for property. This method is generally used for property that generate income such as hotels, restaurants and cinemas. So how this method is used to calculate the value of property? It is basically based upon the profits it generate. The property which generate, basically it is not the property which generates the profit, it is a business which is run in that property, which the profit of which is used to calculate the value of the property. How it works? First we will calculate the determine the gross income. So we will calculate the total revenue generated from the basically from the business being run in the property. So but we are not taking, we will not take say single year's income. We will try to find average net income of the last 2 to 3 years. Why? Because to avoid the possibility of exceptionally good season inflating the receipt or profit, or maybe exceptionally bad one depressing them in a given year. So to avoid these two things, we will be taking average net income of last 2 to 3 years so that we are able to find net income. So then from that we will deduct the operating expenses, subtract all operating expenses such as salaries, utilities, maintenance, etc. from the gross income to arrive at the net operating income. Then we will determine or choose an appropriate capitalization rate based on the type and location of the property. And then in the end, by using net operating income and capitalization rate, we will determine the value of the property by dividing the net operating income by capitalization rate. So this method is also known as balance sheet method, and it is considered to be reliable when, see here, this is an important thing you have to check, when the incomes are not suppressed, the expenses are not inflated, and account books are properly maintained by the owner. Only then you can apply this method. This is most important thing to check. For example, when you are doing hotel valuation, so hotel valuation is done on the basis of a room, a 50 room hotel in a tourist area. So gross income, let us suppose the gross income is 1 crore per year and operating expenses are 60 lakh per year. So net operating income will be 1 crore minus 60 lakh, 40 lakh per year. So capitalization rate, let us choose 8% as capitalization rate. So 40 lakh divided by 0.08. So 5 crore is the value of the property based upon this method. Similarly, if you have to do the valuation of a restaurant, for example, so a popular restaurant in a busy city center, let us suppose gross income is 2 crore per year, operating expenses are 1.2 crore per year. So net operating income will be 2 crore minus 1.2 crore, 80 lakh per year. So let us suppose choose 10% as capitalization rate. So property value will be 80 lakh divided by 0.10. 10% means property value is 8 crore. So this way, this is just an example how the value of the property is determined by profit method. So what are the factors which influence the profit method valuation. First one is location. So now proximity to the attraction business centers and transport hubs can impact the revenue. If the property is situated at a strategic location near the business centers or near the transport hubs, it will attract more clients, and hence they can impact the revenue generated. And then operational efficiency. So better management and cost control can enhance the profitability. Market demand. So trends and demand for specific type of property. For example, in tourist places, tourism for hotels, foot traffic for restaurants. Then economic conditions, overall economic health and consumer spending of that particular area can affect the profitability an, of a company or a business. So that will affect the valuation of the property. So this is how certain factors affect the profit method valuation. So now we will take some examples that will make the things more clear how the calculation is done. Mr. Nirmal wants to purchase a petrol bunk outlet in Jalandhar. The tentative outlet is situated on the Amritsar road in one of the busiest road of the town. The road has a traffic of 500 passenger car units per hour. The annual income from the sale of petrol, diesel, mobile oil and other items is 4 crore. So this is the annual income from the sale of petrol, diesel and mobile oil and certain other items. For the land, company is paying 5 lakh per annum. So the land is of the owner and company is paying 5 lakh per annum as rent of this land to the owner. Property tax is at the rate of 2% of annual rent. Staff salary and other outgoings, these are the outgoings which are given 1 lakh per month. This is 1 lakh per month. So other expenses for running the business are 2 crore 30 lakh. Rate of capitalization rate is 12%. So what is first thing you have to find what is the total income of the owner. So see here, he is getting 4 crore from the sale of petrol, diesel and mobile oil. Other income is 5 lakh per annum from the rent which the company is paying to the owner. So 5 lakh. So total income is 4 crore 5 lakh. Next question is, what are the total expenses? See, he has given you property tax is given as 2% of annual rent. So annual rent is 5 lakh, 2% of annual rent. So 0.02 multiplied by 5 lakh 10,000. Staff salary and other outgoings are given 1 lakh per month. See here it is per month. So we have to do calculation annually. Every calculation is to be done annually. So we will multiply it with 12. So it will be annual salary and other outgoings will be 12 lakh. Other expenses for running the business is given as 2 crore 30 lakh. So total expenses are given 2 crore 42 lakh 10,000. So this is what is total expense of the owner. Next he has asked about the net profit. So net profit, total income minus total expenses. So 1 crore 62 lakh 90,000. So which method you will be using here? You will be using profit method for calculation. So next he has asked what is YP, years purchase. So YP, rate of capitalization is 12. You know YP perpetual is 1 upon R percent means 1 upon 12%. 1 upon 12% means 100 upon 12 means 8.33. So what is the amount client can pay to purchase the bunk? That is net profit into YP. So net profit is 1 crore 62 lakh 90,000 multiplied by 8.33 YP. So this is 13 crore 57 lakh 50,000 is the amount which the client can pay to purchase the bunk. Next, Another example, a petrol bunk is situated on the main road. Mr. Bedi is a dealer of the bunk and he gets a lease rent, means ground rent, from the petroleum company. Other details are as given. Sale of petrol, this much amount, this much a liter of 3 crore, the 3,63,000 liter of petrol is being sold in a year at the rate of 97 rupees per liter. Diesel is 4,95,000 liters at the rate of 87 per liter. Lease rent, which is paid by the dealer, paid to the dealer by the company, is 55 lakh per year. Sale of car parts, oil and lubricants, 16 lakh per year. Profit on car parts and oils and lubricants means he will be getting 15% profit over this 16 lakh. Cars to be serviced per year is 2600 number, 2600 number. Servicing cost per car is 1700 per car, so you total cost will be 2600 into 700, the 1700. So cost of a petrol is 94 per liter. See here, he is buying the petrol at 94 rupees per liter and is selling at 97 rupees per liter. Similarly, he is buying petrol at 85 rupees, 84 rupees per liter and is selling at 87 rupees per liter. Staff salary is given as 12 lakh. Annually, property taxes are 1 lakh. Electricity charges are 4 lakh 80,000. Telephone, postage and stationery charges are 1 lakh 80,000. Traveling and maintenance 2 lakh 50,000. Insurance premium to be paid is 90,000. Grease oil for the car service 8 lakh 40,000. Miscellaneous expenses are 2 lakh 2 crore 30 lakh. The rate of return is given to you as 12%. So you have to find what is the total income. See here, this much amount, the liter of petrol is being sold at 97 rupees per liter. So 3 crore 52 lakh 11,000 he will get from the sale of petrols. From the sale, diesel is 4 lakh 95,000 at the rate of 87. So 4 crore 30 lakh 65,000 he will earn from the diesel. Then lease rent, which the company is paying to the dealer, 5 lakh 50,000. And then profit on cars, parts sold and lubricant, etc. 16 lakh is getting, and he will get 15% profit over it, means 2 lakh 40,000. Then cars to be serviced every year 2,600 at the rate of 1,700 per car, so 44 lakh 20,000. So total, if you add all these things, he will be having an income of 8 crore 34 lakh 36,000. Then what is the expense of the owner? So see here, petrol, this much amount, quantity of petrol he is buying at 94 rupees, mean 3 crore 41 lakh 22,000. He is buying 4 lakh 95,000 of diesel at the rate of 83 rupees per liter, 4 crore 10 lakh 85,000. Then salary of staff 1 lakh 20,000. Property tax is 1 lakh. Electricity charges 4 lakh 80,000. Telephone, postage and stationery charges 2 lakh 50,000. Insurance premium 90,000. Grease and oil for car service 8 lakh 40,000. Miscellaneous expenses are given as 2 lakh 30,000. So if you add all these, this will be 7 crore 83 lakh 97,000. So total expenses are 7 crore 83 lakh 97,000. What is the net profit? This is the total earning and these are the total expenses. So net profit is 550 lakh 89,000. Which method you will be using? We will be using profit method. So rate of capitalization rate is 112%. So you know 1 upon r percent means 100 upon 12, 8.33 is YP. So you will calculate the capitalization rate of the value of the bunk, that is net profit into YP. 50 lakh 89,000 is a net profit, multiplied by YP, it is 8.33. 4 crore 23 lakh 91,370 is the proper value of the bank. The next example is find the value of a cinema with the following details. Capacity of the cinema is 1175 seats. Full house excluding entertainment taxes per show. This is the earning. Per show is 1,75,000. Income from advertisement of slides 2 lakh per month. Share of the owner from the gross income is 50%. Staff salary is 15% of owner's income. Electrical, energy, stationery, repair, taxes, etc. 35% of owner's income. So we have to find value per seat. Assume 40% vacancy per show. This is given to you. So you have to find the value of the cinema and also find the value per seat. See here, he is getting 1,75,000 per show. So let us suppose that there are 4 shows per day and number of days in a year are 365. So all you have to do all the calculation annually. So it means if 4 shows are daily, means total in a year there will be 1464 shows. He is getting 1,75,000 per year from the single show. So total shows are 1460. So he will get 25 lakh 55 25 crore 50 lakh from all the shows. But this will be of all the 100% seats are occupied, means that all 1175 seats are occupied in all the shows. But he has given that 40% is vacancy rate, means 40% seats remain vacant in each show. So 60% will be the seats occupied in every show. So we have to deduct 40% of the gross income due to vacancy. So means 60% will be the actual seats will be occupied in each show. So 60% of 25 crore 55 lakh, it is 15 crore 33 lakh. Then income from the slides, it is given 24 lakh. 2 lakh per month means 12 months 24 lakh per year. So total income is 15 crore 33 lakh plus 24 lakh 15 crore 57 lakh. But share of the cinema owner is 50%. So 50% of 15 crore 57 lakh means 7 crore 78 lakh 50,000. So the gross income of the owner is 7 crore 78 lakh 50,000. So now what else is given to you? Outgoings. Staff salary is given 15% of owner's income, means 15% of 7 crore 70 lakh 8 lakh 50,000 means 1 crore 16 lakh 77,500. Electrical energy is 35% of 7 crore 78 lakh 50,000, 2 crore 72 lakh 47,500. So total outgoings, you add these two. So total outgoings are 3 crore 89 lakh 25,000. So net profit of the owner is 7 crore 78 lakh 50,000 minus 3 crore 89 lakh 25,000. So 3 crore 89 lakh 25,000 is the net profit. So capitalize 12% capitalization rate is given. So net profit multiplied by YP, which is 100 upon 12. So value comes out to be 32 crore 43 lakh 75,000. This is the total value of the cinema. But he has asked you to find value per seat. So for value per seat, you will divide it with the number of seats, which are 1175. So divide 32 crore 43 lakh 75,000 with 1175. So value per seat is 2 lakh 76,063. So next, a cinema is standing on a freehold property admiring 2500 square meter and is owned by a registered firm having 7 partners. The accounts of the business are regularly and systematically maintained by the owner. The details are as given below. Gross received during the year is 2 crore 19 lakh 81,280 and working expenses during the year are 1 crore 53 lakh 84,880. The entrepreneurship and risk of the owner may be assumed to be 25% of the difference of gross received and working expenses. The various taxes such as municipal tax, education tax and fire insurance is 8,17,940. Usual outgoings and maintenance is 6,88,200. Assume 12% rate of return and 10% reduction in the value of the cinema due to joint ownership. You have to find the value of the cinema by using the data given above. See here how to proceed. Gross receipts are given 2 crore 90 lakh 81,280. Working expenditure is 1 crore 53 lakh 84,880. So gross income is 65 lakh 96,400. So what he has given, that we have to deduct 25% as entrepreneurship risk and the owner. So 25% of 65 lakh 96,400, 16 lakh 49,100. Taxes is also given as 8 lakh 17,940. Other outgoings, so you usual outgoings, you add these two, 16 lakh 49,100 plus 8 lakh 17,940, 24 lakh 67,040. So you deduct from the gross income usual outgoings, you will get net operating income as 41 lakh 28,960. So you multiply net income with YP, which is at 12%, means 100 upon 12. So 3 crore 43 lakh 94,236 is the capitalized value. But what he has given, that you have to deduct because there are seven joint owners. So due to joint ownership, he has asked you to deduct 10%, means 90% will be the value. So 90% of 3 crore 43 lakh 94,236. So net value of the property is 3 crore 9 lakh 54,812. So this is all about profit method. Thank you very much. Please like, share and comment on the video, and please subscribe our YouTube channel www.youtube.com at Values Club 07 for more educational videos on valuation and other related videos. Of course, all these videos are free of cost. If you have any suggestion, please comment in the comment box. Your suggestions are always welcome. Thank you very much. Have a nice day.